Next up, my favorite other panel moderator. Can I welcome onto the stage Jessica Walker, Chief Marketing Officer of Fluid Finance. The topic is digital currencies flow in metaverse, digital asset market trends and accessibility. Let's give a big round of applause, please. Actually, I'm sorry. I messed up. Did we take your photo? Yes. We did. Okay, I was looking over here. Guys, it was fantastic. I need more coffee, obviously. Jessica, all yours. Honored to have you.
Am I allowed to sit?
You can do whatever you like. You can take whatever you like. Cool, I'll take that.
Okay, fantastic. So first of all, thank you to the event organizers for putting on an amazing show, and also the previous panel discussion. It's warmed everyone up very nicely for our next discussion on digital currencies and the future of digital assets. I'd actually like to welcome all of our speakers to the stage as well. I feel a little bit lonely up here on my own, so we're going to welcome, we have Andrey, we have Khaled, we have Yassin, and we have Mamadou. So if we can give them a big round of applause before they come onto the stage. Welcome, guys. Thank you. Please come on stage. And we should also be having Mamadou here. Do we have Yassin as well? Okay, let's give it a few minutes while we wait for Yassin.
I think that's
Hi, good to see you. Please come and take a seat. Okay, hopefully Yassin will be coming soon and we can we'll jump straight in just to not keep you guys waiting. So as I mentioned, the previous discussion was touching on CBDCs and the future of digital currencies, and that's really what we're going to be diving into today, and it's great to share the stage with you gentlemen. And I think each of your backgrounds are so interesting that we're really going to have a diverse range of topics here. What I'd actually like to do is round off this panel with a discussion on the future of digital currencies and digital assets, and what kind of things we might see more of, whether it's CBDCs, stablecoins, or cryptocurrencies, what needs to improve, and also if there's anything that might become redundant or even on an extreme obsolete. Before we do that, though, I think we're going to need a little bit more context on where the industry potentially is heading. And actually, Andrey, I'd like to start with you and just jump in with where we currently stand with the status of the digital asset industry, just with your perception as someone that does deal with investors and does liaise with them. Where are we at currently?
Yeah, just thanks. And thanks to everyone in the audience for showing up here and spending our time with us. In terms of overall state of the industry and the digital asset space, I do believe, well, we're not word, obviously, but we are maturing. I think that's one of the most critical phases. I do believe that there's a lot of, we're obviously seeing, and most of you are part of that movement, and overall, we're seeing a lot of capital being deployed, more and more so. And to me, that's the key. I've always been around startups. I've always been around in the industries that were looking for financing, raising on blockchain, utilizing new digital asset frameworks, both in terms of asset-wise and in terms of regulation and the technology that allows it to happen. So I do believe that we are seeing more and more initial fundraising and a follow-up fundraising in a token format. It is becoming more and more widespread, and I think that's the inflection point.
Interesting. So more of a diverse range of different alternate funding as well. So Khaled, I'd like to turn to you now, because if we focus in on the context of what Andrew's just given us with kind of overall industry, focusing on flovtec, your perception of what we're seeing. So actually the slogan is stay liquid. So I do want to ask you, when it comes to the current status of digital assets in the industry and digital currencies, is there a liquidity issue at the moment, and how is that driving our conversation today? How does that play a role in what we'll be discussing?
Sure. Thanks a lot for the question. Pleasure to be here and speaking to everyone. So just a quick background about flovtec. Flovtec is a digital assets market maker, which means essentially we're the people in the books who you trade against when you go on trade and on the centralized exchanges, for instance. So in terms of liquidity, which is in our slogan, 2017, you had a problem of lack of liquidity. How can you bring in a lot of liquidity into the system and into an industry that is very young? 2021, 2022, the problem of scarcity of liquidity is not so much present anymore. I think the problem that we're seeing is a lot of liquidity. To some degree, there are areas in the market that still need liquidity, but where liquidity is present, it's important to manage it well. And I think that's the challenge that we have, how to manage liquidity. And I think we've seen all examples of people or institutions that have maybe mismatched durations, maybe mismatched their liquidity in a way, and they've ended up being in trouble for it.
Awesome. I can see Andrey making some points there. He's ready to jump in when it gets to the discussion point a little bit later on. Great, thank you for that. So now, Mamadou, I'd love to turn to you because we've not actually managed to catch up before the panel. Michelle made some great points in the previous panel discussion. And
she always does.
She always does, it's true, and she was referencing CBDCs and also the fact that Africa needs to unite as one nation and have, if they're going to move forward with digital currencies, an interoperable digital currency that's able to move between countries. We've seen the Nigerian digital currency backed by the central bank as being something that's been really progressive. How is that shaping the conversation for you when it comes to central bank, but also bank-backed digital currencies as a digital asset flow?
So, when you look at the African continent, you're talking about, 55 countries, but you have a few blocks who have a common currency. So, at this point, what is really needed, indeed, they're leading the way. I would say countries like Ghana or Nigeria in the CBDC space. Why? Because they've understood that if they don't do it, they'll be outgrown by the current digital currencies that are actually available. Did you know that every other year, and last year for sure, and possibly I think this year, Nigeria is the largest trading market for Bitcoin? Like, it would shock everyone, but it's a reality. Why? Because Africa is probably one of the top regions, if not the main regions, in desperate need of digital currencies. When you look at the volatility of the currencies, which kept on depreciating, Bitcoin and other digital assets like USDT, etc., became the perfect option and solution to escape this. And that's why we decided as Ubuntu Tribe to launch Giftcoin, which is a gold international fungible token, because it would be a perfect stable coin backed by a real asset, less likely to be subject to volatility. If you see the dollar this year, which rose significantly, and most of the global currencies like the euros depreciating, gold didn't lose value, right? And Africa happens to sit on 48% of the global gold reserves, global gold deposit. Therefore, instead of falling into the poverty trap on using paper money, tokenizing gold and using it as a medium of exchange, but also as a savings instrument, became for us a no-brainer, especially now that you're referring to central banks. We do understand also that there's a huge liquidity and hard currency crunch in emerging markets, not just Africa, Latin America. Let's say to get dollars for international trade is a challenge for a lot of those companies. Now, when you sit on so much gold, then you don't have the problem if you tokenize it, and especially with a very low banking penetration. I think less than 20% of African adults have a credit card, right? Because it's complicated to go to bank. What crypto does, it really allows to leapfrog. And Africa has demonstrated along the decades, especially those past 2 decades, a huge capacity to leapfrog. We leapfrog fixed line, went straight to mobile, to GSM and mobile phones, but we also leapfrog the checks, etc., by going into mobile payment. And I made the first investment in the world in mobile payment. And if you look at Kenya today, 40% of Kenya's GDP flows through mobile money. And the problem is, how do you now get that money local go international with a gold-backed coin that's perfect, with USDT, assuming you have dollars reserve. But once you're sure to have gold, that was for us the best way to bring Africa into the global economy, but to also get everyone to have a chance, because from 5 cents, you can effectively, transact and have access to telemedicine, pay online education through digital currency. So I believe Africa will probably become a top leader over the next decade in the space of digital currencies.
Okay, fantastic. So Jason, just for some context, we were discussing the future of digital assets. We were giving a little bit of focus from each of our representatives on the panel, from their backgrounds, and we'll ask you a question next. And then after that, we will go into a little bit of a discussion/conversation, open to debate on the future of digital assets, if there's anything that may become obsolete or redundant, things that need to be improved, and challenges that may be along the way. Before we do that, I'd love to get your perspective as the CEO of BitForex, and actually I have to give Khaled the credit for this question here because he suggested it and I thought it was absolutely excellent. When it comes to the market for digital asset exchanges, it is a competitive, overcrowded market. How will centralized exchanges survive this competitive market model where we do see competitive natures of profit margins and moving forward?
Well, that is a really good question. Okay. So BitForex, we have been in this industry for more than 4 years already. We are able to witness the bullish market, the bear market, and we also go through a lot of the crazy times. So, I remember one of my friends have a saying, current number of the exchange even more than the project parties at a different region, different types, like a centralized one and decentralized one. And each one of them, I believe they have their unique ways to operate their exchange. They have different ways to brand themselves. Either it's good way or bad way. And I believe for us is that we keep dedicated and to learn from the market. And we always put the interest of the users into the first place. And of course, the safety also is one of the most important thing we are really concerned about. And secondly is that we always monitor and we are trying our best to provide a one-stop solution for the digital asset management platforms that are able to fulfill these really innovative industries, these really fast-trending industries. Because I believe that today we are talking one concept, and maybe next day we are talking another concept. That we need to have the abilities and the development abilities to able to follow all this trend and able to catch and provide the right tools to serve all these clients. And in the same times, right now on this crypto or blockchain market, there's a different sections and there's different concept. What we do is that we always provide a more lower barrier, flexible, and trustworthy platforms. So I think that's the way we are able to survive until now. Speaking about the competitive environments, etc., I believe no matter the decentralized is going to really booming or decentralized exchange going to take a really huge place in this market. I mean, I agree with that, but still, this is a fair market. There's demand, there's supply, and I believe for us, either you choose a decentralized one or you choose a centralized one, we are still here. And we are here because one of the reasons is that there's demands on the market. Maybe for the newcomers, they need this platform able to learn. They need a platform that able to easy to use. And then once they get understanding and knowing about these industries, about maybe the crypto transaction stuff, then they have more experience and more comfortable to switch to other decentralized way. Thank you.
Fantastic. So now if we take a look, some of the answers that you've all given have been really interesting, and some recurring words that have come up is interoperable, one-stop shop, this kind of cookie cutter approach of something which is interoperable across countries. If we have a crystal ball and we look into the future of digital currencies and how this might look, it will be different for regions across Africa, to CIS regions, to our American audience members as well. Or is that not the case? This is what I want to ask you all now when it comes to the future of digital assets. How does that look for each of you? Maybe Andrey, we can start with you and then we can start the conversation.
Sure. So we at Currencies.com are now focused on enabling, essentially syncretizing all of the points that all of the colleagues here in the panel have raised. In terms of liquidity, and to play a little bit of a devil's advocate and contrarian here, look, liquidity by the terms and conditions that they're off would be looking for yield, right? It's ever in flux, it's turning around, just like capital was looking for return, right? So that over liquid positions that we're seeing in the market would want to make sure that they're being generated yield off. And obviously, if you look at the crypto DNA, or what's like, sort of Monda's MO of the crypto industry, it's all about earning, right? So people really, like most of the people, by like 80% of surveys acknowledge that people are getting into crypto to earn more. So obviously that's one uniform thing that is present across all the regions. So what we're seeing and what we're identifying as the major opportunities to erase like sectarian technological DeFi, CeFi, mumbo jumbo, and to create a very easy runway platform into yield and earn opportunities on crypto. Because that's what people, we're just using what's given, right? People are looking at crypto as an instrument of generating yield. Now, we have to, however, recall the global context, the macro environment that we're operating in. And what we're undoubtedly seeing now is the fact that there is divergence going on, right? There is a global regional geofencing, if you will, in terms of financial systems. There are currency blocks, there are all that kind of thing. And the only thing that is actually connecting the two, apart from, badly run conventional finance system, oftentimes misfunctioning, is crypto, right? However, that is not without its perils, because let's say we're coming up with algo stablecoins have been getting a lot of bad rep, or stablecoins tethered to the real life assets. What if, let's say, the value of the assets that the stablecoin is tethered to depreciates? Well, the stablecoin ceases to become a stablecoin, right? So we have to be really cautious about it. And in our opinion, that retail-driven, institutional capital, investor-supported march toward generating yield on crypto should be matched by the fact that at a certain point in time, it should not be CBDC or some geopolitical or regional block currency on crypto, but rather special drawing rights kind of thing, with International Bank of Settlements, where really big guys, governments, will be able to lend out and take out positions in.
So, Mamadou, you mentioned a gold stablecoin there. Andrey, in your opinion, would a gold stablecoin, would that still be too geo-linked to a political push, or a geo-region for a stablecoin?
Okay, let's recuperate. I do believe that the ghost days are over. Now, obviously, it's still popular with some of the investors out there, but honestly, they're playing Nintendo Switch in '80s, whereas we're living in a world of advanced games and metaverses and all that kind of stuff. I do believe in the Bitcoin as a pristine collateral. There is but one. Obviously, we are living in a competitive environment. There are altcoins that might create a competition for Bitcoin out there. And I do believe that the basket that would underpin that future special drawing rights like crypto, which is like a totally imaginary scenario for now, but I do believe a lot of people will be talking about it tomorrow, is going to be heavily focused on the crypto assets, including Bitcoin, rather than gold, obviously. So I'm no gold bug.
Is there anything that you want to add to that, or to reference from that point? We were talking about the different potential baskets, and maybe the fact, or this is open to the floor, if we're going to see stable coins as something that potentially deter from the original freedom of a currency movement, which is why Bitcoin then would be the advocate of choice.
I'll start if that's okay. Okay, first, let me make a small announcement, if you allow me. We today happen to be the first regulated gold-backed stablecoin in the world at sovereign level. And we got our license, it took us a year, from Bermuda Monetary Authority. So the whole idea of being regulated, when you look at what happened with Terra Luna, somehow makes sense, right? Because you look at the stats. You have, what, 100 million wallets out there, right? And 90% of the capital globally, it's the hand of institutionals, right? Even if BlackRock is announcing a few moves into Bitcoin, most institutionals are not yet getting into the actual investment space into the cryptocurrencies. So for us, being regulated showed a stamp of approval in the sense that we went through all possible audits one can imagine that would reassure any customer that the processes and everything are not only legit, but real. And I believe in asset-backed and real asset-backed more than in algorithmic stable coins, right? If you look at Terra Luna, and honestly, I could tell anyone from day one, nobody didn't want to listen to me. But when you back your stuff by Bitcoin, which is great, and I'm a big fan of Bitcoin, and you $80 billion market cap, right? So the model only worked when it goes up. Why? Because once it starts going down, and you're backing it by another cryptocurrency that is closely like 60% of the $3 trillion whatever market cap of the crypto industry, then you have to sell it. But when you're that big, you selling it triggers the price of Bitcoin down because it's a big chunk that you sell to kind of get back. But now, now that your Bitcoin is lower, your reserves are lower, right? Then you have to sell more. And then you're in a deadly spiral. So this is basic logic that nobody saw. But once you at least have a few people, so either we go into regulation or we have a peer review, but the nice thing of asset-backed physical asset is that also you have a decorrelation from the crypto market, right? And at the end of the day, finance is based on two things. Asymmetry of information, meaning I know something you don't know, therefore I'm going to buy hoping that it goes up. Second, collateral, right? And yes, Bitcoin is a great collateral, okay, because it has short stability to a certain level, but it's also very volatile, right? And that's why we decided to back our stablecoin by gold. Now, if you look today, the thing about gold, it didn't collapse like it outperformed. I mean, our coin outperformed the stock market, outperformed the crypto market. So stable coins remain something where people don't want to lose it all. We need to understand that those who got into the crypto market were mostly millennials and tech people, right? And at that point, it's not the guy who has to run a family and who's ready to lose everything. I'm sorry, it remains the majority of the population. So somehow you need to cater for all bracket of investment, and whomever wants to manage their portfolio from a crypto point of view needs, and I'm 20 years in finance, so if you want to mitigate, you need stability, you need a few stable assets, a highly performing asset, and a counter market asset, right? But nobody wants to lose, right? So that's my take.
I like Andrey's point about on how there's a lot of ring fencing of transactions and monetary systems which crypto allows everyone to bridge. And I think to your question, what is the future of digital assets? Just to come back to that question, I think it's very difficult to make a prediction. I think if I can link to what had been said about stablecoins and what was just mentioned in relation to Terra Luna, I think the experiment will still be there in how you could create a stablecoin that is truly decentralized, as we do see now that maybe the need for centralized or central managed stablecoins is still necessary. I think to have that, I think it's still healthy to have that experiment still, for people to figure out if there would be the alternative to stable coin that didn't make it a truly decentralized stablecoin, or one that was managed by a protocol, albeit in a suboptimal way. So that's kind of how that's my take for just bringing it all together.
And back to the kind of stablecoin debate then, because we've heard some backed by gold, backed by Bitcoin, backed by a basket of assets or currencies. Maybe Jason or Andrey, you'd like to comment on what you see as being the backed by. What would the answer to that sentence be?
Okay. Stablecoin. Okay. Normally stablecoin is backed by dollars, right? But to be honest, even those for the traditional financial industries, we can see how high currently the inflation it is. I mean, even for the traditional financial industries, there is no stable such things. So I mean, and in the same time, no matter backed by Bitcoin, backed by gold, I think we are all in a very, very early stage. I felt maybe everything is an experience, like experience right now in the very early stage, because that's humanities, the technology is growing. There is a saying that in the moon there is such a big amount of gold. Then, I mean, maybe gold price will be decreased, right? And also that's who define gold is a real asset. It's based on the consensus. Same, I felt it maybe similar as Bitcoin, right? So stable, I think we are too early to say about that. But valuable asset, that is something that we need to be concerned about. Yeah.
And could we say then, sorry, just, oh, you go.
Yeah, to your point on the future of digital asset, right? So we a bit at a cusp today, which is adoption, right? So you can be only so creative, but let's compare the two waves, internet and crypto, yeah? So 10 years, 13 years later, I can't say that Bitcoin has gained the same traction that internet gained in 13 years. Let's face it, yeah? Now, there are many reasons for that. No, central banks didn't shoot internet when it started, so of course, it didn't have this all political and impactful. But the reality is, if you want to trigger adoption, you're going to have to get what people understand, right? The reason why NFT has been booming, at least during the bull market, it's because it was a digital asset backed by something real, whether it's an image, whether it's a painting, you call it what you want. People understood that, right? And today, again, if you look, just take real estate, that alone. The problem today is that if once you start tokenizing real estate, you start also democratizing access to those assets. The real issue is that, 99% of the wealth is concentrated in 1% of the hands. So how do you reverse that trend? You're going to have to break down this 99% of the wealth in micro asset, affordable and accessible to everyone. And that's a transitional phase that needs to happen anyway, because it's going to bring liquidity in a market that is going to be illiquid within the next 2 to 3 years. Why? Because all the macroeconomic indicators lead to a crash. I mean, you can say whatever you want, but we're going there. Now, how do you get those big assets? You have to break them down. And for me, digital asset, the future is the tokenization of real asset as a starting point for wealth democratization, and also because it's something that everyone understands. If you want adoption, people don't understand the Bitcoin white paper, I'm sorry, right? I mean, and I did math as a major. I do a bit, but I'm thinking of everyone else, like, good luck, right? So I think it's going to grow fast, and what we're experiencing now is the same phase as the internet crisis. Mark Cuban used to say, it's just during those phases that you see who is swimming naked, right? Point is, it's actually true. It happens the same with the internet bubble. we experiencing a cleansing of the industry as to who is strong enough to resist the tide and will be still there afterwards. It's normal, it's okay. We shouldn't ask ourselves the problem, the question about that. But it's obvious that, yes, it's going to be big. Why? NFT? Simple. It's not because it's fun that Louis Vuitton and all those guys do it. Because it's a huge data collection point. I don't need to pay Facebook anymore to get your data. Of course it's going to grow, right? And also because not everyone can buy a Louis Vuitton bag. Now they'll have it in a small digital format in their own metaverse, right? So you have the new model, I'm big in Japan kind of expression. I'm big in the metaverse, it's okay. Even if I don't have a crazy life out there, the same way as people create their life on Instagram. So that's really, it also plays on the psyche, on the data. So I think it's going to grow, but it won't be that algorithmic creation. It will first start by what people know, and then we'll get more creative. But you need to onboard everyone first.
There's a certain sweet irony in the fact that a gold asset stablecoin representative is advocating for fractional ownership of a real asset in a metaverse, which is terrific.
That's exactly what I'm doing.
I really appreciate the irony. Now, to finish off that sentence, backed by what is that stablecoin? By guns and firepower. That's how it's been. Well, you mentioned that you did math as a undergraduate. I did international relations, and I worked for the United Nations. And look, let's take a look at how the financial system is run. It's backed by the firepower of the leading state. Now, what's underpinning that bypass financial system, of which we're all part and parcel of, is community adoption. It's driven by community and adoption. If we're moving into some sort of a, cyberpunk, neo-feudal kind of reality in which relatively mighty corporate entities might start off with their own digital assets and may enforce their, adoption within a certain realm that they got a remit over, well, there's a key. That's your alternative to fight back against the state, against the centralization. Drive the adoption, drive the use case, and for that, give people ability to earn on their crypto, regardless of what there is. Transcend the mumbo jumbo, right?
No, I agree.
Good.
Okay. So one thing that you guys mentioned there, you were talking about kind of stability of price, education as well as being kind of a forefront. Adoption, is it something that actually, if we look at mass adoption, so not just everyone in the room, because I think everyone that is sitting here has been innovators in their own way and building towards this kind of global ecosystem, does everyone have to understand cryptocurrencies or digital assets to use them in the future, or is this something that's going to be so integrated? And then on top of that, what kind of things need to be integrated? Because when I look on my job role here at Fluid Finance, onboarding new users, one core thing is, okay, is it easy for them to understand? Is it easy for them to cross-border send funds? And also, are they financially incentivized by a small staking model, which is kind of an incentivization that the DeFi element of the future of assets really is still going to play a big role? That's kind of how I see it, and I want to know what you guys think on that.
Yeah, the question is what drives adoption? Is it real world assets? Is it virtual assets? Is it both? Is it ease of use and settlement? Is it utility? I mean, I think all of these things drive adoption. There is more of it happening now. Primarily, I think it has to do with the settlement of transactions on a perpetual machine, which is blockchain, which is what all of this is built on. So you don't have any fragmentation, you don't have any irreconcilable, let's say, transactions between banks, etc. I think that's primarily what drives adoption. Ease of use is something that I think the whole community needs to work around, right? So it's how do you present the case for those who've never transacted before, those who've never owned crypto or any quantities of it, to be able to access it or settle through it without even seeing it, or without even having to be conducted to do so. I guess for me, and what I'd like to hear from other people as well is there the thinking that virtual assets, call it metaverse or NFTs or whatnot, would that be the primary source of adoption going forward, or would it be anything else?
Okay, I'll answer that and then I'll come to your question. I think it can be. Why? Because it's a source of revenue, right? I'm not big on play to earn, but 18 million people in the Philippines are big on it. Suddenly, you don't have a job, you might never have one, and guess what? You get paid playing. Of course you're going to drive adoption, right? So if it's something that improves your financial situation, right? I'm much bigger on learn to earn, personally. That's what we're pushing. But yes, so the second thing, which now answers your question, who in the room knows how internet works? Right? Not many, but you use it, okay? And why do you use it? Because before the internet was the way you know it, it was a black screen where you would code something to type so that the other person on the other side uses it. Suddenly, they created World Wide Web. And it became easy for everyone. You just type and it became intuitive. That's the challenge that the crypto industry has to address now. My grandmother or my kid will never get this concept of crypto keys and public, open, private key. No. It was done by techies. Maybe the normal people need to come and help make it much, much user-friendly. And that's why we built a whole wallet embedded to the coin, plus a social commerce platform, so that you know what to do with it. Anybody can plug to it, and you can pay the person versus having to be this complexity. So ease of use, increase of financial means. That's why I was referring to Nigeria and to other people. And of course, staking, right? So you get suddenly, you don't need to give the bank your proof of address, all those kind of crazy stuff to get a loan, right? I just put it there, there's a value to it, and I get, so those are the game changers in the industry. But what you really need to work out is, how do I make a 5-year-old understand it and use it without having to go to a PhD before?
Now, we're just going to wrap up. We have a few minutes left. I'd like to actually give each of you the floor for 1 minute just to talk about your organizations and specifically what you guys are working on in the next 12 months to help with this movement into digital currency flow, because all of the organizations that you guys are working for are each contributing in its own way. So, Andrew, maybe we'll start with you and work your way along the panel.
Sure, gladly. And actually, as a matter of fact, I'm so lucky to be Chief Commercial Officer at Choice.com and a lead at B2B. And at Choice.com, we see our mission as actually building on top of what everyone has said here, is to educate folks and to get them easy on-ramp into earning more on their crypto or fiat assets through the facilities that are powered by crypto, through the facilities that are powered by conventional finance, asset management type of thing. So this education, so raising the minimum bar and the awareness, and obviously getting those opportunities in the hands of people. And for us at Choice.com, it's so important that we do that in conjunction with our mission to bring you as businesses, as future entrepreneurs, as those that run their companies, ability to do that through our B2B offering and our ability to essentially white label all of our earned crypto banking and fiat banking facilities. Thanks.
So flovtec is in the business of providing services for digital assets, token issuers, and trading venues. So if you come to think about venues or the number of trading venues, maybe Jason has a more accurate figure, but it's in the hundreds in terms of digital assets. Last I checked today, the count was 20,000. I think there is now an increase in. There is an expanding market called non-fungible tokens. It's a very interesting market for us. The fact that it's non-fungible is where we had to focus all of our efforts to try to see how can we provide the same services in terms of bootstrapping liquidity for items that are by nature non-fungible. So helping those entrepreneurs or organizations issuing collections, all of these NFT collections that end up listing on the trading venues and then collecting dust afterwards. How can we make sure that there is an active market, that there is a market that is healthy in valuing these assets, which ultimately benefits those who issue such NFTs? That would be the focus for us. Additionally, I think for token issuers and for trading venues, the retail volumes have gone down substantially. I think priority for us in the next 12 months is to make sure we hold hands with everyone to be there for token issuers, be there for those who are, let's face it, they're going to be listing or they're going to be issuing digital assets in a market that might not be as favorable as it was 6 months ago, 7 months ago. So that would be flovtec's mission in the short term, yeah.
Great. And Jason, what about you?
Okay. So for us, BitForex is very straightforward. We are the platform, or we are the carrier of the asset. No matter play to earn, no matter learn to earn, or no matter the stable coin, etc. This is so many terms on the market. But without the secondary market, you cannot define the real value of it. So that's what we do. But in the same time, we want to help and we want to support the community, all the project parties, to find the right value of their assets. That's why we have been dedicated to launching our incubators program. We're already helping a lot of the project to have a really successful record and performance, no matter on their communities, no matter on their DApps, or no matter on their value of their digital assets. And also that we always want to provide and keep our users safe. I mean, right now the market, the industry is much different than before, but security, safety issue is still one of the major concerns in the market. That's why no matter on the product party side or our user side, we want to provide a transparent safety platform environment, let them able to define the real value of their asset. Thank you.
Thank you.
And on that note,
Yeah, I'll just finish one thing. So I just want to congratulate Olga and the MetaWeek team for one of the greatest moderator I know, and some of two great partners I'm actually about to finalize or working with. And you're great too, Gordon, don't get me wrong, right? So I love you.
I'm letting you talk because I love you.
We'll have a chat. So, yeah, so Ubuntu Tribe actually, it's, fintech Web3 company. Our vision is to provide equal access to opportunities regardless to wealth of birth or place of birth by leveraging on digital assets. So what we're doing now, we're democratizing access to gold by making available to anyone on any mobile phone, smartphone or not, from as low as 5 cents, and provide a whole ecosystem for people to be able to interact, transact, remit through a social commerce platform and a digital wallet. Our ambition really is to provide an alternative, safe investment. Could be a stable coin or a commodity. This is, of course, depends on the geographies and so on. But really give a chance in context of challenging times for people to have real solid asset that allow them to preserve wealth over time. Just to give you one last point, gold at the beginning of the 19th century was 0.7, a barrel was 0.7 gram of gold at the beginning of the 19th century. The same barrel is actually 0.9 gram of gold, and it was $1 at the time, and now it's like $100. So 100 times, while you would pay less in gold in the barrel 100 years later, just to give you things in perspectives. That's why we go for gold or go home. Thank you.
Yes?
Guys, thank you so much. That's everything from us. Great panel discussion. Gordon, I'm going to hand it back over to you. Thank you.
Well done, and let's do a group photo. We can do a better round of applause than that. Come on, what was that? That was weak. Great panel. You stand in front of the tables. Good job.